No one likes a currency crisis, right? It's a situation that can cause widespread panic and uncertainty affecting everyone from large corporations to small businesses and everyday citizens. The value of money is something we often take for granted, but when it starts to fluctuate wildly, it can disrupt the entire economic fabric of a nation. Well, Iraq's got a game plan to tackle theirs head-on. The country's been grappling with a significant currency crisis for years, and now the government is stepping up with a bold strategy to stabilize the dinar and bring more predictability to the economy. Here's the scoop. The Iraqi dinar has been on a wild ride with a significant gap between its official rate and the black market rate. This gap has created a parallel economy where the black market thrives, often at the expense of the official economy. The disparity between these rates has been a source of economic instability, making it difficult for businesses to plan and for consumers to trust the value of their money. This discrepancy fuels instability and uncertainty in the economy. When people can't rely on the official exchange rate, they turn to the black market, which operates outside of government control and regulation. This not only undermines the official economy, but also creates opportunities for illegal activities and corruption. To tackle this, the Iraqi government is focusing on eliminating the black market. This is no small feat, as the black market has become deeply entrenched in the economy. However, the government is committed to taking decisive action to bring the dinar back to stability. A major step includes addressing the smuggling of dollars to Iraq, a move strongly supported by Prime Minister Shia al-Sudani. Smuggling has been a significant issue, draining valuable foreign currency reserves and exacerbating the currency crisis. By cracking down on smuggling, the government aims to reduce the supply of dollars in the black market, thereby narrowing the gap between the official and black market rates. One proposed solution is currency flotation, letting the dinar's value be determined by market forces rather than a fixed rate against the US dollar. This approach, known as a floating exchange rate, allows the currency to find its natural level based on supply and demand. While this can lead to short-term volatility, it is believed to provide a more sustainable and realistic valuation of the currency in the long run. Sounds risky? It might be, but advocates believe it could stabilize the currency in the long run. By allowing the dinar to float, the government can remove the artificial controls that have contributed to the black market. This could lead to a more transparent and efficient currency market where the true value of the dinar is reflected in its exchange rate. Meanwhile, the Central Bank of Iraq, CBI, is not sitting still. They are actively involved in implementing measures to support the government's strategy and ensure the stability of the dinar. The CBI plays a crucial role in managing the country's monetary policy and maintaining confidence in the currency. They've rolled out control measures like restricting foreign exchange transactions and mandating domestic transactions in dinars. These measures are designed to reduce the demand for foreign currency and encourage the use of the dinar in everyday transactions. By making it more difficult to obtain foreign currency, the CBI hopes to reduce the attractiveness of the black market. However, the effectiveness of these measures is still up for debate. While they may help to reduce the immediate pressure on the dinar, there are concerns about their long-term impact on the economy. Some experts argue that these measures could lead to a shortage of foreign currency, making it difficult for businesses to import goods and services. Some experts suggest a managed float approach, offering a balance between market flexibility and CBI control. A managed float allows the currency to fluctuate within a certain range, with the central bank intervening when necessary to prevent excessive volatility. This approach aims to combine the benefits of a floating exchange rate with the stability provided by central bank oversight. This could avoid excessive volatility while still aiming for long-term stability. By carefully managing the exchange rate, the CBI can help to build confidence in the dinar and reduce the reliance on the black market. This approach requires a delicate balance, as too much intervention can undermine the benefits of a floating exchange rate, while too little can lead to excessive volatility. In the end, Iraq's strategy to crush the black market and strengthen the dinar is a bold move towards economic stability. The success of this strategy will depend on the government's ability to implement effective policies and manage the transition to a more stable currency regime. It will also require the support and cooperation of businesses and consumers, who will need to trust in the value of the dinar and move away from the black market. With sound policies and effective management, there's hope on the horizon for the Iraqi dinar. The government's commitment to addressing the root causes of the currency crisis and implementing long-term solutions is a positive sign. If successful, these efforts could lead to a more stable and prosperous economy, benefiting all Iraqis. Stay tuned to see how this economic story unfolds. The journey to stabilizing the dinar and ending the black market is just beginning, and it will be fascinating to watch how these bold measures play out in the coming months and years. The stakes are high, but so is the potential for positive change.